Hello, everybody, and good evening to tonight's show, your third show for PCFTA students. Tonight, we will have a special event. It will be hosted by Brother KS and also by Mr. Fred Tam later on the second session. Today, we will be teaching you about what are we supposed to do?
Can you guys hear us and see us in the webinar jam?
All right.
Let us know whether you can hear us, importantly. First, you can see whether you can hear us and see us in the webinar jam.
Yeah, if you can hear us or see us, please drop a message.
All right. Okay. All right.
Type at the chat box if possible. Can you guys see us or hear us? Hello?
让找太多时间。Okay, all right, okay, let's start then. Let's not delay anymore, okay? So for the first session, I'll be guiding you on the SI platform. Then after that, the second half session, it will be Mr. Fred teaching you guys on how to create a trading system, which he will share on how he created the TAG system, okay? Okay, so let's go to the screen.
So without further ado, I'll pass on the time to Brother KS to explain more about how to operate on the SI station.
Okay, all right. So this is the SI station, all right? Whenever you start your program, it will be like that, okay? So then, okay, you can see over here. Okay, hold on, sorry, let me just do it. Sorry guys, just a little bit moment.
While we are waiting, just to give you a heads up, later on the second session, Mr. Fred will come in to give you all some idea on how to design a trading strategy with you guys, okay? So now we will resume with Brother KS.
Okay, so firstly you can see this point here, this icon. You click on it and you can see this thing over here, okay? As you can see over this star button, have you ever, you can see this icon here, this one, okay? Have you ever seen our tech group, how Mr. Fred said the sharks are in? This is where you can see the sharks are in from this area, okay? From this area, okay? Then let's start the basics lah. Okay, over here at the portfolio, you can right click and create new portfolio. Let's say for today we will go PCFTA. Okay, then we submit.
But then the currency is in Singapore dollar.
Oh, that one. Okay, for the currency wise, okay, you see here the currency wise, there's a Singapore dollar, Australian dollar, Thai baht, Malaysian ringgit. All this is only important if you are going to insert your transaction inside. Okay, but although if it's a different currency, it's also okay lah. You just assume it is Malaysia. But if you want to change to Malaysia ringgit, also okay. You can put to MYR, PCFTA. Okay, let me just put one because I had the PCFTA there already. So submit. Okay. So here you can see I have a PCFTA and a PCFTA 1. Okay. For the PCFTA, this is the Singapore dollar one. So let me just delete it. How to delete? Right click on the PCFTA, delete. Okay. So I will only use the PCFTA 1. Okay. So I click on it. You can see over here, this is the tab. You can see this PCFTA 1. Okay. So over here is a portfolio stocks. Okay. But then for now, there's nothing inside. So let's insert one stock. Okay. For me, I'll insert, let's say, FGV. Okay.
Maybe you slow down a little bit because it's a bit fast.
Okay, I slow down a bit, sorry. Okay. So let's say I insert FGV. Okay. So I search FGV and then double click on FGV. You can see over here, the position 1 is named as FGV. Then you can see the last done price, the change in percentage, okay? Then the volume is here. Let's say I would like to add another stock, let's say JHM. Also do the same thing. Okay, So okay, over here you can see there's this name, post, volume chart, last done, change, percentage change. Let's say I'm somebody that prefer the last done to be at front, okay, then the change to be at side. So you can just press on here and just pull around, drag around the way that you prefer your chart to be like, your layout to be like, okay. After this, you click on options, display layout, save as, and then click on default and save and overwrite or save, okay. But for me, I don't save because I already have my own layout here already, okay. So every time you on your SI, you will see this thing around here like that. It will be like that, but except for these 4 bars, it may change around because this is every time. Let's say if I on, let's say I press on the other portfolio, let's say I click on steel, oil and gas, new one, PCFTA one, core warrants, technology. You see here, there's only maximum 5 I can open here. 1, 2, 3, 4, 5.
So basically what you mean is that you can only open up to 5 tabs at a time. Anything more than 5, it will replace with the older one, the first tab that comes in, and then it will replace. Okay.
So let's say I press on this mid stock 2. Okay, you can see at the top now is PCFTA, oil and gas, new, core warrant, and technology. When I click on this, one of it is gone, which is the PCFTA one.
I see.
Okay. So now let's go back to our PCFTA one. Okay, so over here. Okay, so let's say I right click and I go to, okay, let's say I want to open a chart. You can right click and select on dynamic charts. Okay. The second way to open a chart is click on this line chart area and the chart column over here. So first you see this will be your chart. Okay. So I maximize, as I open FGV, I maximize FGV. Okay. So you can see this is the chart. Okay. I think for standard, I think you guys, when you open the chart, is it also like this TAD? Because I think this is already customized by our admin, which is Cherry. And she already insert all the templates, all the indicator into your SI. It should be the same. Maybe yours is don't have this Bollinger Band, this gray area, this green area. It should be around something like that. More or less the same. Importantly, you can see this turtle line here, the atom area here, and the ducks here.
So far, you guys can follow us, right? If you got any questions or if we are a bit fast, please drop a message so that we know, and then we will suit accordingly.
Yes, maybe I'm studying fast today. Okay, all right. So let me know if you cannot follow up. I'll just reduce the speed. Okay. So this is the chart that I opened just now. See here, you can see here is the FGV chart. Okay. So let's look at this top column area first. Okay. So over here, this settings, which is this area, can see this area. When I press settings, then it'll be gone. So when I press settings,
okay, Shirley got a question. She said that hers is not the standard template.
Okay. Let me just see this point. Can you see at this? Can you find this bar here? Template. Okay. Is yours written there as a plain chart or blank chart? Or either if you press inside, do you see at least a F1 TAD or either F1 fast turtle template inside this area?
So
let's wait for switch to. Oh yes, okay. So okay, now it's okay. Never mind. Just leave it there as a blank chart first. No worries. Okay. Now I'll just slowly get to that point. Okay. So here is this settings button, as you can see just now. This area. Over here you can see there's 4 columns or either 4 tabs. Okay. First is the stock listing. This is where you can change this whole chart. Let's say I want to switch to another stock, I just search here JHM. Then if I enter, it will switch to a JHM chart instead of FGV already. Okay.
Just want to ask, because Shirley said when she chose F1 fast turtle, then it changed. That's what she meant.
Correct. Yeah. This is the template, which is similar to MT4. Remember the day when we open a new chart, it's a blank chart with a lot of grid, black color screen. But whenever you open a template, you can see different things. It's similar to our current SI as well. Okay. So after here, you can see this stock listing. And then bottom here, you can see another three: indicators, drawing tools, and performance comparison. Okay. So let's click on indicators. Click indicators. You can see here. This is where you can add or minus indicators. So, or for example, on my chart now, you can see there's total, the moving averages, the volume, the atom, the DAX, and the stochastic. You can see here it's the same thing. Bollinger Band, sorry, because I already enabled this. You can see EMAs, the total, the volume, the atom, the DAX, and also the stochastic. Okay. Okay, move on to the drawing tools. This is where you can draw the trend lines, the Fibonacci retracement, Fibonacci projection. Okay, even the day, remember we learned Gantt fan, you can also draw it from here. Okay, we'll move this further on later. And this is a performance comparison. This is where you can compare two different charts to see whether, let's say, technology stock and technology stock, whether they are correlated. So you can do it over here. Okay. Now let's move on to the next one. This is the refresh button. Just in case your chart is not refreshed, you can press the refresh button. Okay. This one, I actually never used before this one. Okay. This is the fact sheet of this company. Let's say you can see now it's JHM. Whenever I click on this, you come out with this additional table. Okay. Let me maximize it. Over here, you can see at the bottom, there's a fact sheet. The fact sheet is where you can see the price of the counter. These are the properties. These are the normal properties you can see at every place. Okay. And over here, there's a small glance of the chart. Okay. And here is the latest news. Like example, like today they publish a fourth interim single tier dividend. Okay. And over here is a consensus estimate. This is where the brokers they come out with report whether they recommend a buy or recommend a sell in this counter. Okay. Then they also have the mean target price. Means let's say there is 5 brokers. What's the average price that they price this JHM? Okay. So then this is an estimate change over past week. Okay, this is the key statistic. This is important for fundamental people. You can see the EPS, earnings per share, the price, the PE ratio, dividends. All these are all over here. Then there's this dividend history table, peer comparison. Here's very long. As you can follow this more on you can check on our tax system website to know more of all these things. Okay. Then over here, furthermore, we have this financial. Okay. Financial is where you can see the past history, the earnings report. They already have the summary report of all their earnings. For example, this one is the P&L. The profit and loss statement over here. You can see there's a 2017, 2016, 2015. Okay. And over here is the balance sheet. Okay. Also for 2017, 16, and 15. Okay. All those you can see from here. Okay. Insider trades is where significant traders they trade on their stock. You can see from here. Okay. Ownership. Who are the biggest owner of this company? Okay. Then whether the company did any buybacks. Okay. Then there are many other properties here, but let's focus back on the charts. Okay. So I close this chart. Close this page. Okay, let's move on to here. Okay, this one you can see this 3 months. Over here you can see this 3 months. Okay, this 3 months means that how long the time frame you want to see. Let's say this range, this whole range from here to here is a 3 months range. Okay. Okay, then look at this 3 months. Whenever I switch to 1 year, you can see the chart zoom out already. This is a range of 1 year. Okay. And over here you can see this 1 day. This means that 1 candle is equivalent to 1 day. You can switch more to, let's say, 1 second chart, 1 hour, 1 week. Okay, up to you. But of course, let's say for the stock, we use back 1 day. Okay. And over here you can see this linear. Okay. And here linear means that the price. I'm sure you guys learned this in the module 1 or 2 at the start. Then linear. Then logarithm is good for you to use for your Elliott wave. Okay, then also have this reverse and percentage reverse. Okay, but just focus on linear lah. For us normal trading wise, just focus on linear is good. Okay, and this two is not very important. Okay, let's go for this one. Zoom in, zoom out. Okay, you can see this whenever I press the zoom in, we're moving nearer to the price. Now I press the zoom out, we are moving further from the price. How about this one? This one, they will zoom out all the way. See if I press on it, you can see this, I can see the whole view of this company.
So you zoom out actually, how far will you zoom?
You will zoom out from starting to ending. So starting at the day it listed until today's price.
I see.
So you can see here is the whole history of JHM. And this is very important for you to do analysis on. You must see the whole trend of this company first. Okay. Okay, so let's see now. Now I've already zoomed out so far. I want to zoom in back to the current price. I can either press on this zoom in, or I can just, on my screen, I left click and I just pull to the area that I want to see. Let's say I want you to be nearer, I pull again, like that. This is zoom in. If I want to zoom out, I press on the screen, left click, and then I pull to the right, pull to the left. Then you zoom out. Alright, okay. Let's move on to this candle. This is a candlestick. This is a different type of candle. Let's say this is a different type of chart type. Then there's line chart, okay. We stay back to candlestick. Okay. This is not actually not very important. I'll just skip this first, okay. Just bring it to the important parts today, okay. Okay. Now come to this template, okay. You can see for us, this is Mr. Fred's account, okay. You can see he has a lot of template, okay, because he tests a lot of things. But I think for you guys, there will be about maximum about 5. The standard template, we have the F1 TAD, we have the F1 fast turtle, we have the F1 fast turtle plus sensitive, and also we have the blank chart, which I think Shirley was having a blank chart just now, okay. So let's move on. Okay, all this part is not very important. Okay, now let's come to this add to alert. Okay, let's say if you want to buy at a price above 1 here. Okay, currently you can see here the price is at 122 now. Let's say I would like to buy at 122 and above, but I cannot be there to see it in front of my screen.
Okay.
So I can set an alert. This one, add to alert. Over here you can choose the price done. It goes to greater than or less than. Okay, then you click on the price 1.22. Then you just press OK. Okay. Also, you can learn this furthermore in the test system. I recommend you guys to go and see the videos because test system there's a lot of things to learn from. A lot of things we can learn from SI. SI got a lot of features, so we should utilize it often. Okay. Okay, now let's go to okay, then we just focus on this area. Okay, this area. Okay. Let's say indicators. You see here, this one, if I tick on it, you can see the Bollinger Band coming out over this area. If I untick, then don't have. Okay. I can also delete by doing this delete. Okay. Okay, let's delete everything first. Okay.
So this will be a blank chart.
This will be a blank chart. Okay. So let's say now I would like to add more. I would like to add a volume. So I press on this add more. Under indicator, add more. Okay. Then let's say I will search for volume. Over here, you type volume. You can see here, there are so many types of indicators
related to volume.
Correct. These are the volume related indicators, where these indicators are derived by volumes. Remember, you guys have learned before, for example, like OBV, you have learned before, it's cost of volume also. How about volume rate of change? Also based on volume. Okay. So for us, we just use the normal standard volume. Okay. So sorry. So if you want to click on volume, you either press on volume and then add here, or you can just double click on volume. And you can see at the left side, it will come out volume. Okay. That's close. Okay, as you can see from the volume, and you see there's a 5 in between. So what is the 5? Okay, let's move to the volume around here. Okay, let's see. Can you see this red color line? This is the average volume of the past 5 days. Okay, So for example, today's volume is higher than the average price of the average volume of the past 5 days. We can consider this as a strong volume breakout today. So let's look at the price. The price is making a very good, nice engulfing candle. So is this a stock to watch tomorrow? We will know later. Okay, let's move on. Okay, so let's come to this. When you click on this volume, you can see beneath it is the properties. You see this N. This N means the parameter. So let's say the moving average, I would like to change it to a 10 moving average of the volume. Also can, no problem. I press enter on my keyboard. You can see it changed volume, become 10. Okay. Let's move on. From the component, you can see this volume, visible or invisible.
So
then the color
basically,
style.
you change the parameter to 10.
Correct.
And then what changes do I actually see at the volume? Is it the volume change to 10 or?
You can see the changes in it is the moving average, this red color line.
I see.
Just now it was a 5 moving average, now it's a 10 moving average of the volume.
So the parameter is the moving average on the volume.
Correct. Okay. So we can see the color style. Okay, you can press on this. There are two types to choose. One is the rise. Okay, you want the color to change due to the price or due to the volume changes. So let's say if a rise in price, if the price rise today higher than yesterday, then the volume bar will be green color. Even though the volume dropped, but as long as it's close green, it means that the price has moved up. Okay. Okay, then let's over here there's the up and down color. Then whether we want to see the MA, is it visible or not, you can change the thickness, the line style, the color. Are those okay? So now let's add some more. Let's say I'm a MACD, let's say MACD. MACD. Let's search MACD here. Then you can see here. There are so many MACD. There's MACD, there's even volume MACD. I don't know what is that. Okay, so let's click on MACD, double click, or can just press add here. Okay, then close. Okay, you can see over here, you can see this. This is the MACD. Do you agree that it's slightly too thin for me to see clearly?
Yes.
I can, okay, see here. You see this in between the bar, the volume and the MACD. I can drag this, drag this higher. Okay, let's see, wow, now I can see a lot of the MACD. But now I cannot see volume.
Yeah.
So either you can reduce the MACD or you can increase the volume over here.
I see.
But when you increase the volume, the price chart will be smaller. Okay, so it's up to individual. That's why we recommend you to not put too many indicators at the bottom, so you can still see the price clearly. Okay. Okay, let's see over here at MACD. You can see here, MACD, the parameter is 26, 12, 9. You can see the short is 12, long is 26, and is 9. So this is the standard, standard parameter for MACD. Okay, but for Mr. Nicholas, that day I'm sure you guys have heard, he used, if I'm not mistaken, it's 11, 16, 9. I think something like that. It's up to individual.
15, 9.
Correct. Up to individual on how you would like to use MACD. But let's take it to the
default one.
Default one, correct. And over here you can see also there's this different MACD line. You want to change the color, the style, all those, okay? You can change the signal line, the histogram line, all this, okay, all over here. And now let's move on to moving average. So I add more moving average. Okay. Sorry, I have so many errors. Okay. Okay, over here you can see there's exponential moving average, there's the double exponential moving average, there's a weighted, Wilder, all those. Oh, sorry. Let me just zoom in, sorry. Okay, there's exponential moving average, there's simple moving average, weighted. Okay, let's use exponential average. So I can double click on exponential average. You can see there's one line appear here. Okay. Okay, over here you can see this. EMA is based on a close price of each candle and 50. So it means that this moving average is derived by the past 50 days closing price average. Okay. So let's say I would like to change this 50 EMA to 100 EMA. I click on this N, I change this, put 100, then I press enter. You can see here, now it becomes EMA close 100. Okay. Over here is the visibility. You can change the line weight. You can even change the style. Okay. A lot of things that you can customize yourself here. Okay. Okay. All right. Then let's go for drawing tools. Okay, this will be the final part. Then we will invite Sibu Freitam to come and teach you guys on how to create a trading system. Now let's move on to the trading tools. Okay, you can see this is the cursor. Okay. Then you can see this is the arrow line. This is the trend line. This is the line. Okay. Then furthermore, we have this horizontal line. Let me zoom in for a while. Okay, horizontal line, the vertical line, the Fibonacci retracement. Okay. So let's look at this. Okay, let's click back to this. Let's see JHM. Okay. Let's try to analyze this stock by ourselves. Okay. Use purely on drawing tools. So I can see this is a one high. I will connect to another high, and let's see where the trend line ends up. So I press on this trend line. This vertical segment is called the trend line. You can plug from the top, okay, all the way to the next top. Let's draw that. Okay, and you can see my cursor is still in a pen form. I have to right click. Then you can see there's no more pen form. Then I can just navigate around. If I stay in a pen form, it will just continue to draw charts around, draw line around. Okay. Okay, now let's continue. So you can see JHM is yet to break the trend line. Okay. Now let's draw a secondary trend line from this top to the top here. Let's draw from the top here all the way down there. Okay. Then I have to, you see, let's see if my pen, right, I do not right click. When I pull, right, it will draw another line again. So I have to right click. Okay, then you can see now it's no longer a pen. So this one I would like to delete this trend line that I've accidentally drawn. You can either press on this line and press delete on your keyboard, or you can see this. Whenever I click on this line, look at this part. Okay, whenever I click on it, it will change to this one. This is the one that I'm currently clicking on. I just press X. Then you see it's gone already. Okay. Okay, let's move on to this this horizontal line. This is important to draw your support resistance. Okay. Let's say I can draw this. Okay, you can see over here, there is one high here. This can be potential resistance point. So let's plug in the resistance here. You see this long line here? Alright. Remember, after you draw a line, right click on your mouse to disable the pen. Okay. You can see this part. This will be the next target for JHM. Okay. And furthermore, let's see. You can see there's this Fibonacci retracement. Okay, let's click on it. You guys still remember how the Fibonacci works? Okay. Let's see. You can see this is one high here. This let's take the overall high. One high here, and the low point is here. So let's drag from the top all the way to the bottom. Okay, over here. And then right click. You can see this. Okay. So what is the target? This is another way to do a targeting for using Fibonacci. You can see 23.6, 38.2, 50%, 61.8, 78.6. These are the levels of the resistance. You can see over here, you can see this. Just recently only, the price rejected from this 50% line. It is the wonder of Fibonacci. Fibonacci is a very good tool to use as a price targeting, a retracement support, all those. Okay. Oh yeah, guys, please. Tomorrow we have a live trade session with Sibu Freitam and Nina. If you are free, you can go and watch it because the market have been retracing from the high these few days. So it's a good time to spot for a buy on deep stocks. So tomorrow they'll be talking more on a buy on deep stocks. Okay. Okay. Let's delete this. How to delete this Fibonacci? You click on Fibonacci line. This one. And then press delete. Okay. So what else we have here? So the others here is not very important. Okay. Okay, you guys can explore here yourself. Okay. There's a little buy sell line. There's this text also. Okay. All right. So I think that's the basics of navigating within the shared investor platform. Okay. So now I think I'll invite Mr. Fred to help us teach us on how to design a trading system. Okay. Let's let Mr. Fred take over. Okay.
I want to delete the whole thing.
Delete the whole thing,
Okay. Am I? It's okay.
Okay, let's just close this. Okay.
Good evening.
Good evening, Mr. Fred. Okay.
Good evening, all.
All right. Can you all hear Mr. Fred talking?
May I know how many of you are online? Can you hear me, guys?
Should be okay. Should be all right. No
Yeah.
problem.
Let's
Good evening.
see.
Shirley say good evening, Mr. Fred.
Hi. Good evening. How many is on?
Yes, Ken, you can hear. We have 14 members online today.
All right. So
okay, let's start.
Today, I like to teach you how to answer a possible 20-mark question that may come out in the exam. This question has come out quite a number of times. So besides coming out in the exam, this is also good to know question. The question that you would like an answer to. It is about designing your own trading system. Okay. So the question is as follows. If I can post it, do you have this?
See over here.
All right. So I like to post firstly the question that is an exam question, and it goes like this: as a chief analyst on a trading floor, you are asked to design a trading system based on your preferred technical analysis technique. So preferred techniques.
So does it mean that you can use any method?
Oh yeah, you can use any method. Basically, when it comes to methodology, there are two major methods. One is a trend following system. The other one is a ranging system.
I see.
Normally, we will choose trend following because at the end of the day, trend following is still profitable because it lets your profit run and cut losses short. I will let you know the 5 reasons why I like this type of system.
Okay.
So explain how you decide on your entry and exit points, including stops. Okay, point out any possible weakness in your system. So that is the question.
So may I ask, is this also one of the questions in your assignments?
In fact, this is in EFT 604. I don't know how many of you attempted it.
So it is in your assignment, so you have to listen carefully to Mr. Fred talking today.
So this, you can answer the assignment.
Alright, this will be help you in your assignment for answering the assignment 604. Okay.
So they sometimes twist the question a little bit, to say that you are asked to design a trading system for a Bitcoin.
Last year's question we had.
Last year's question.
Correct.
Actually, designing a system for Bitcoin or designing a system to trade copper, coffee, cocoa, or Dow Jones or stock market, it's the same design, it's the same type, same systems. So don't be worried if they ask you to design a system for an instrument that you haven't come across or traded, like Bitcoin. Like one of
Okay, guys, welcome back. Sorry, there was some technical issue just now. So let me know if you can see the screen now. This is on a Microsoft Word, and also whether you can hear us clearly. All right. Okay. So let's continue.
All right.
Okay.
Welcome back. Just now I said that I prefer to use a trend following system. All right, system. Now, as regards my preferred technical analysis indicators, to answer the first question. So my answer is my preferred indicators are 4. Number 1, I use a 50 EMA, 50 exponential moving average. Number 2, I use a modified Donchian. I don't use turtle. Modified Donchian means 2010 is in fact turtles. Just that in the exam, turtle is not as desirable as that of modified Donchian. Donchian is an acceptable name. So modify in the sense that instead of 2020, we all know that Donchian is 2020, yes? And buy if the close is above the highest high of the last 20 bars, and sell if the close is below the lowest low of the last 20 bars. Instead of 2020, we use 2010. So in other words, buy above the high of the last 20 bars, sell below the low of the last 10 bars. So by putting the parameter, narrow it down to 10, we increase the speed of cutting loss, and that will save us a bit of money, because downtrends, they fall, stocks off, or anything falls faster than when they rise. So you don't want to put a 20 bar to exit. So normally 10. So that's called a modified Donchian. So let me repeat. So my preferred technical indicators are 50 EMA, a modified Donchian, or the modified 4-week rule. That means one is 4 week, the other one is 2 week. Fibonacci retracement and stochastic. So these are the 4 indicators that I would use.
So remember, it will be 50 EMA.
All right.
It will be the turtle, the modified Donchian as well. The modified Donchian will be the Bollinger Band.
Bollinger Band.
As well, you can see here is the modified Bollinger Band.
No, we don't, even Bollinger Band don't need to use, although in TAD, the A atom is actually Bollinger Band. But for simplicity to answer this question, for the sake of answering the exam question, no need to put Bollinger, just put...
So we're using Fibonacci.
Fibonacci and stochastic.
And also stochastic.
Now, Fibonacci and stochastic is used for pullback trades, and the 50 EMA is used to define the trend, and the modified Donchian is used for breakout. So I'll explain after this.
All right, okay.
So we start off with first, what are the preferred indicators? There are 4 indicators. Now, why I have chosen the above indicators is these are the reasons. I have chosen the above indicators because number 1, they are non-multi-collinear. It's important. Number 2, and they are proven to be good, effective trend following systems, trend following indicators. Number 3, they are easy to use and understand. It can be a reason, easy to use and understand. Right? And they let profits run and cut losses short. Now, all trend following systems will let profit run and cut losses short. So you're going to be right in that. And that's proven. Any profitable system should, if you have profit, try not to take the profit, let it run. But when you have losses, cut it. Now, so, and traders tend to be more disciplined when you have a trading system, and because you are forced to obey trading rules. So these are the being mechanical. So I've chosen the above indicator because the last reason, because they are mechanical. That's the word. Mechanical means they allow traders to have the discipline to obey the rules. Obey rules means you got no subjectivity, objectivity. When the price cross below the 50 EMA, okay, exit.
So we must cut straight away. No thinking.
Don't have to think about it lah.
You just believe in your system and just cut.
All right.
All right.
And so then you go on to, okay, Now I want to show you a chart, okay, that how by designing a trading system, it can help you in your entry and exit. All right, so here, at this point, you just hear me out for discussion purposes. Now let me pull out a chart. Let's pull out Karimin. So you're gonna help me, KS, to pull out Karimin. You can also pull out Karimin. Huh?
So how do you pull out a chart? Remember, let's just open any chart first.
Open any chart.
Okay. You maximize it. Then you can see over here, the stock listing. You search Karimin. Okay. Then you press enter. You can see here. You can see Karimin.
Oh, but it's
Okay.
what
But
about theirs?
correct.
Is it full of arrows and have they got a
Correct. If
template?
you guys have this template, a
You
lot
got
of indicators, you just click on this and just choose the blank chart.
Can you all choose the blank chart for today's purpose lah?
Correct.
Because we are learning, huh?
Yes. Then let's see if, like Mr. Fred, he has all these drawings. Okay. You can just click on this drawing tools here.
Right here. Yes.
Okay, drawing tools here. Okay, then you can click on this.
Clear all.
Clear all. Can you see this? The eraser with the spikes. Erase all. Then you remove everything from the chart, and it'll be a very clean chart.
So do you all have this now? You're looking at a clean Karimin chart.
Okay, let me know if you guys cannot catch up, and we will just explain again.
Okay, let's say, okay. Now, I want to ask you all. Now you're looking at this Karimin chart. If you are new, even right now you are experienced, you look at it. Do you know where to buy and where to sell? Do you know exactly where to buy? It's hard, right? Because it's like a roadmap, but without much lights and signposts in here.
It's a very plain chart.
So it's too clean a chart. So, and this is where by adding technical indicators to form a system, it can time your entry and exit. Now, the first thing that we should do, okay, when we pull out a chart, whether to buy or not, is to look for the direction first. Is the direction, what is the direction of the trend? Is it up trend or downtrend? Let me ask you all, how do you, what indicators do you use to define a market's direction? Which one can you, what indicator do you think, can you think of right away that can give you a sense of direction for that stock? Do you use a stochastic, for example, to determine direction? Or do you use the MACD to determine direction? Do you use the DMI to direction? Or do you use the MA? Let's say I give you 4 choices.
All right.
Can you
so what is your choices, guys, over here? Okay.
You get a stochastic.
Actually say MA.
That's, yeah. It's called 100 marks, actually. So an MA. So let's draw an MA, shall we?
Right.
So now, so that's the first indicator, 50 EMA. To draw an EMA, you click, okay, on these wheel gears, and you go to indicator. Now, actually here, in the blank chart, you don't even have all this, you know. What you're saying is this, they're all empty already. Can I clear?
Just clear it.
Now I'm clearing all,
Right.
All right. Right, let's say I don't have any indicator. Now let's put the indicator. So a moving average indicator,
Right,
you add more,
then we
you
have
go
search
to exponential, either that or you search
EMA.
EMA and you click add. That's it, you have added an EMA. Can you see on the top left?
All right.
Now this is the EMA that the software drew for you. All right. And is yours saying 50? Okay, 50. N is 50.
If your N is not 50,
If your N is not 50, you can change it.
All right.
Yeah, I can change it to 20, for example. Then it becomes, this is a 20, moving average. If 50, then price cross below it is 50. Okay, then it's still above. Now, you know something about the MA, right? The MA tells you direction of trend. Direction. So if price is above MA means direction up. If price is below MA, direction down.
Okay.
So I ask, so where at which point is Karamin up. So you can see down, up, down, up, down, up. So you can see roughly here is up.
Currently now you can see it's up.
And right now, is it still up? Although pull back a lot, because it didn't go below MA, it's still up.
Like I was saying just now, Mr. Fred, like for example, tomorrow your live show, would you be spotting more on the buy on dip stocks tomorrow?
Yes.
All right.
Because prices already they have come down for the 5th day today. Many of them some rebounded So and the rebounding ones actually it's it's good to look for buy on dips.
All right.
And even the pullbacks is look for oversold. So look for oversold stocks.
So how do you do it? We will know later.
Yeah,
Right.
I already give you a hint. My preferred trading system are 4 indicators. Okay, moving average tells you the direction of trend. Modified Donchen tells you the breakout. All right, give you additional buy. Burst, Fibonacci retracement and stochastics. They are used for pullbacks. So now you can see why I put these two. Those last two, third and fourth indicators that I use in my 4 indicators for this system. The last two, 3 and 4, they are used to buy pullback.
I see. So we have this buy on breakout. At the same time, we also have the buy on pullback.
Pullback. So, but first of all, define the trend. So let's say we define the trend is up, but still, where to buy? Do you buy here, or here? Here it broke up, but then broke back down. Here break out, break back down. So we need to go to step 2. And the step 2 is that, okay, it's not good enough to have a moving average to tell you to buy. Like here, you cannot be buying here, it is so high. So you pull out another indicator, we call turtle. Not turtle, Donchen. So I click on add more.
Then we can search turtle.
Okay,
this turtle is already embedded in your SI station. But of course, during the exam,
it's an imported one.
Correct. We will write it as the Donchen system. But over here is written as turtle system because this one is modified by
us. We modify it. And our modified one, okay, let me add first. Our modified allows to change. Your Donchen cannot change one. Okay. The parameter cannot change. So I click already. Now this one, the original is 2010. See, we can change one.
Okay.
So
for the N, over here you can see there's an N and there's a K. For the N is the high. So how many bars high? For the K is the low. So how many bars low? So here you can see it's a 2010. So it's a 20 bar high and a 10 bar low. Okay.
So now you overlay now Donchen, modified Donchen. Can you see clearly now where exactly the day that you can buy now? My pointer is there. I'm pointing to here. All right.
Okay.
See, I can point to this arrow to buy. And I can do that because I put in a modified Donchen. Right. So that's why modified Donchen is the second preferred indicator of the 4 indicator. And this is a buy on breakout method. So let me repeat. Step number 1, define trend. If the trend is bullish, buy. But if the trend is bullish, buy. The 2 ways to buy. One is buy on breakout, which is where we are now. Later on, after this, I'll describe buy on pullback, which is used stochastic and Fibo. Okay. That's why now you see why the Fibo and the stochastic is put there as the third and fourth one, in case you want to buy on dips. Now we want to buy on breakout first. Now, by the way, after answering this question, I'm going to send you the answers, and the answers will have all this. So don't worry if you have not taken the notes. Okay, I will give you a perfect answer for you to memorize, but understand it first, memorize, and then you can, in the exam, right, when it comes out, you can just answer it. Okay. Is that all right?
All right. So in that case, you all can focus more on how Mr. Fred create this. You try
focus.
to understand it now instead of jotting down notes.
Instead of jotting down notes.
Alright.
Don't worry, just
I
let me
didn't know
know.
that. Mr. Fred is going to give you some tips.
Yeah.
Okay. So later,
You
Mr.
know.
Fred will send you the notes. So now you guys can just
So,
focus on listening
you see,
to Mr. Fred.
if you never got this, the Don Chen, when you just buy based on a crossing or moving average, can you see here it crossed the moving average? You see here it crossed the moving average, and even here, but the 2 times here falls by. If you had bought, you lose money. And can you see how by overlaying a Don Chen or a turtle on it, it helped to filter out the whipsaw. Because moving average in a sideways market got weakness. But this weakness is overcome by Don Chen. Don Chen is not that sensitive. That's why you need a very sensitive indicator, but you need an unsensitive. But in a sideways, moving average is very sensitive. But in a trending moving average is the least sensitive like now. Okay, right now. So let me just clear. So this is the correct buy signal. When the trend is up, you are only allowed to buy only, and you buy and break out. Now, can you see how many of the power of Don Chen? Besides that, you also got to buy here, and another buy here. And as it keeps going up, they give you points of further buy. If you don't have a Don Chen, you wouldn't know of further buy. If you got a moving average, for example, the most you get a crossing right at a crossover. After that, there will be no further buy signal. That is why a Don Chen or a modified Don Chen, it does a beautiful job of giving you additional buys as and when it happens. Now, there's one more indicator, which is volume, that I forgot to talk about. On the breakout, there should be higher volume. So I haven't drawn volume. So let's do volume together. Where is the volume?
An indicator.
Indicator.
And add more.
Add more.
And we can search for volume.
VOL.
Okay, volume.
Okay. Okay.
Yes.
So it's clearer. It's clear that on this breakout, see on that day the volume
it's much more higher compared to the previous.
relatively higher.
Alright, you can see the past few days. You can see it's very flat. On that day, it's a very strong.
Very strong, and also it is above the moving average.
Moving average of the volume.
There's a moving average of the volume. That means it is it's trending. On that day, there's buying coming in. Okay, and if on that day you click on volume distribution chart, you should see a lot of buy ups. All right.
For the volume distribution chart, you can also refer to the TED system. Inside, we have already explained what is this volume distribution chart. Okay.
Yeah.
Mr. Red can continue.
So step number 2 is therefore So first we find the direction of time. Step 1. Then you buy on breakout. Step 2. After that, now the other way is to buy on dips.
Buy on dips.
Buy on dips.
Buy on dips is similar to buy on pullback as well.
Okay. Can you see in this example? Okay, let me clear. Okay, all.
Okay.
Okay. Can you see that there was a rally here? From here, it rallied to here, and then it pulled back. Got it? So, there are 2 ways to buy. One is you buy on breakout, which you already did. So, you bought here, you bought here, you bought here. Okay, your friend came and he said, can buy? You said, can. I already bought, but if you want, still got, can buy. And then suddenly it didn't go up anymore and start to pull back. You got another friend coming in. Hey, can buy down here. Then you say, well, yeah. I still buy. I buy on dips, but there are 4 conditions. At least 4. Actually, there are 5 actually.
5 conditions.
5 conditions. Do you remember the 5 conditions? Can you type
I
down?
think, okay, let's see the 5 condition. Number 1, it should be on an uptrend,
Yes.
which means that it's making a higher high and a higher low.
All right.
Right? And Number 2, it should be on above the 50 EMA.
See? I mean, KS remember very well.
Number 3,
Wow.
Fibonacci retracement.
All
it should
right.
be at a 38.2, the 50%.
Okay, so you hold on. So let me measure. Okay.
This is a Fibonacci retracement. Correct.
This is the extension.
Alright.
All right.
Bracket again.
All right. This one. Low to high. Can anyone tell me it corrected how many percent? Yeah. Here. 50%. Beautiful pullback 50%. And is it still above the 50 EMA? 50 EMA being one of them.
Correct. It is correct. It must be above 50 EMA.
So this is the 50 EMA.
Correct.
It's still above all.
Okay.
So you already have 4 conditions.
Okay. So what's the fourth? We have only 3 conditions here. Okay.
Oh.
So what is the 4th condition?
There, Fibonacci, have you counted?
stochastic.
Okay, stochastic oversold.
Stochastic.
So can we check stochastic? So click on indicator. All right. And put stochastic. All right. Slow start. Okay, F1, slow stochastic, add. And 14, please put 3, because you want to catch the bottom and top. So overbought, oversold. Now, here can, but normally I put 5, 533. See, can you see that?
For 533 and 1433, 533 will be very sensitive.
See, very nice.
Okay.
It hit the bottom.
All right. So Mr. Fred loves the 533.
Because we're just catching bottoms only.
Okay, all right.
In an uptrend and catching tops in a downtrend. Otherwise, don't simply use stochastic. Stochastic is too fast an indicator to determine direction of trend. Right. It's just good for overbought, oversold. In this case, oversold. In an uptrend, look for an oversold stochastic to buy. And even in a very strong uptrend, the stochastic don't go down to 21.
So let's say if it's an uptrend, the stochastic is above 80. What should I do?
Oh, actually we call it stochastic pop. This is something new. I didn't talk about it. Basically, in an uptrend, stochastic go 80, further buy.
Further buy.
Or at least you hold.
Let's just say hold. Don't be so aggressive to further buy.
Okay, but stochastic pop, can you please go into Google and find out stochastic pop? What's the name of that guy? Anyway, he uses this. All right. In an uptrend, the strongly uptrend, you remember oscillator become quite useless, They give you premature, actually overbought situation. And it just because an indicator has gone into overbought like stochastic, doesn't mean that you should sell into an uptrend or at least, right? Because it can continue to make higher high.
I see.
So, and that's why the stochastic pop comes about, boop, and it can continue to go up. So never use a stochastics overbought to sell into an uptrend. That is already trending.
So we should follow the trend. We only buy.
You buy new ranging, you only use stochastics to buy and sell if the market is ranging. Once they gone into an uptrend, then you be careful how to use. Like FGV is already an uptrend, so stochastic is overbought. You go and sell into an uptrend. I mean, if you caught it on 4 days ago on the 21st of February, which I did, I tell you, I so love at the FGV at 136 because why? We went to 138. I key in the 136 pop, hit 136, and it dropped to yesterday 114. Right. And then today I don't know what's the closing.
Any of you have sold FGV at 1.36? This is also the price that I'm sure Mr. Fred have sold.
I sold.
He was happy that day. Wow.
Some students also sold.
Right.
They thanked me. Then today they bought it back at 114.
I think yesterday I saw you call a buy at 1.1.
118. Because 118 was a resistance turn support. Then actually you went close at 116. What is today's close? I don't know.
We'll chat later. Right?
Yeah.
Let's analyze FGV later, maybe.
Yeah.
Perhaps. All right.
So come back to that. So what are the conditions to make 5 conditions? Right. So we got a pull back towards the 50, and then one more. fast turtle, or rather, you must have a Japanese candlestick buy signal here, right? That's the fifth. Japanese candlestick buy signal here.
So there are 5.
Is there not, right? So now let's look at the fifth one. All right. And there you are. What is this pattern called? Can anyone tell me?
This pattern.
Shirley. Shirley is pretty good. Now, this one. You've got a green nearly covering, eating into a white, into a red. Counter attack at the oversold area. Oof, what an ideal buy on dips. This is how to buy is buy on dips in an uptrend after a pullback. It's called piercing line. Okay, we didn't answer. All right, here's it. Piercing line. Piercing line normally need a confirmation. That means the next candle, the close above the half, the last 2 bars. So if you do not know piercing line, you know fast turtle. Fast turtle can be used, okay, as an alternative to candlesticks, but you don't write fast turtle in the exam. They also don't know. So fast turtle is for our student, okay, who especially with these 3-day course, they're not taught or they can't memorize so many reversal patterns, 2-day reversal patterns. So I give them fast turtle. Now, fast turtle, this is how you do. You can also overlay this. You click on indicators. You click on the turtle system. Instead of 2010, put 22. Now see, 22. Down here got no arrow, right? No arrow because it's 2010. Now I put 2. Once I put 2, can you see the arrows come out much faster? So instead of 2010, it is 22.
I see.
But it is the top 2 is important because it is buy or higher.
Right.
So which is this? So can you see that it is as timely as a Japanese candlestick with confirmation? That's what it is. That's it.
Okay, so that is just a very simple way. So over here we have discussed on the buy on breakout strategy and also the buy on dip strategy. Okay. Okay. As you can see from the template, remember just now I teach you how to open the template. Okay.
All right. Hold on. Okay.
Remember over here this template. Okay, this template. Remember over here you have only about 4 to 5 templates. Okay, the F1 TAD is the way to buy on breakout. You can see the F1 stochastic, the F1 fast turtle. This is the buy on dip strategy.
This one.
All right. Then there's also another one that you guys have is the F1 fast turtle plus sensitive. This is where the stochastic is 533. For the F1 fast turtle, it's the 1433. Okay, but those are only available in yours. Okay, not in Mr. Fred's platform because he has his own template. So you know that in your own SI, we already incorporate this 2 strategy for you. Okay, and you can as well same thing. You will learn this in the TED system website, or either Mr. Fred has already teach you today. So to buy on breakout is must be above 50 EMA, and also the Donchen breakout. To buy on dip is the 5 criteria, which is the uptrend, above 50 EMA, Fibonacci retracement, stochastic oversold, and Japanese candlesticks. In our case, is the 2-2 turtle, which is called a fast turtle. Okay.
And if let's say when to use a fast turtle, when to use the slow turtle, the fast turtle can be used if a stock is already climbing vertical and then you scared it crash. Then like over here, if you use fast turtle, your arrow will be here. If you use the slow, the normal turtle, which is the Donchen, you see, it only got here. You're a bit delayed. Let me just show you what I mean. So here, instead of 2010, let's say I go back to 2 and 2. 2 means you sell, there will be a sell arrow below the low of the last 2 bars. See? Straight away it comes out. So you get out of Charimin much earlier, which helps to save you some money. Rather than right now, if you use slow turtle, I'm afraid the slow turtle cannot handle a steep climb and a steep fall. But nothing can.
In fact, over here, if you're using the TAD signal, you are still not out yet because it has yet to break out
Yeah.
the 50 EMA.
Yeah.
So let's say your profit will be reduced. You will not
Right.
be losing, but your profit will be reduced.
Right. So what you can do is, okay, you like to have the cake and eat it. So you got out of the fast turtle, then we look at the slow turtle. It still haven't triggered a sell signal, no? Haven't, and it's still above the moving average, So you said maybe I sold off too early because I'm so scared that if I sell late, what if it crashes? So I got out here, but it's making a U-turn. Now, because it's making a U-turn, I like to get back in if I got out. Where do you get back in? You use the fast turtle as well, 2-2 rule. Now, 1-2 of the two candles, that is your high of the candle. That's the low of the two candles. Tomorrow, if let's say Charlie Min can cross back above the half the last two bars, yes, we enter buy.
So right, Mano, what is the price for the last 2 bar high?
Okay, there you are. This is it. 1-2. So I put my cursor around against this.
Okay, you guys can see that the top
75
left
and a
corner.
half.
You can see the top left corner. You can see
Over
this-
here.
Over here, correct. You can see there's OH. The H is the high, which is written there as a 0.755.
755.
So what will be the buying price over here?
One tick above that, so
One
76
tick above.
or higher.
So everyone, this may be a stock to watch
Oh no,
tonight. In Reds.
today's high is higher than yesterday's
Today's
high.
high is yesterday's
So
high.
it must close above today's high.
I see. So
Today's
it's
high is
either
76, so 76 half.
Okay, so 76 half is the price that we all should watch tomorrow. Okay, you can see today's candle is formed with a higher volume.
You look at that. This
Even
is a
the
telltale
boosting
sign.
now.
Whoa, this is telling you something, man.
Mm,
Right.
so-
That is a counter attack. Okay, that means they just sell down and just in order to wash out the weak hands, and then now they are rebounding. If tomorrow 76 or above, re-enter Charimin.
So everyone remember 765 is the
Right.
entry price for Charimin buy on dip tomorrow.
Yeah. And after all, it didn't go below the moving average. There is still no sell signal. No? So now we come to the next part of designing a trading system. So designing a trading system, one, you determine the trend. Okay, what is the indicator you use to determine trend? Moving average. Then, if the trend is up, buy only. There are two ways to buy: buy and pull back, and buy a breakout and buy and pull back. You did that. Now, the step number 3: setting of stop loss. You already gone in, right? Because the trend is up. You buy and pull back, buy and breakout. If it drop, where do you cut loss? So setting the stop loss. Now, there are a few ways, but for the sake of answering the exam, just because you got no much time, no. Right, 36 minutes to answer a 20-mark question. All right, so you put, if it goes either below, you put a stop below the low of the last 10 bars, which is a turtle, or moving average 50.
Moving average, not
So
duck.
not that. Moving average, don't use duck. Duck is my term.
For in
over
your
here.
exam, right, you all have to use the technical analysis names.
Jargon, yeah.
All right, not using by the way Mr. Fred names
Yeah.
it.
So this moving average, you like to put a stop below the moving average. In fact, today, Kevin, one of the students, asked me this.
Oh, okay.
Karimin, can hold, no? I say hold. Although it dropped so very much, but you must be able to stomach the pain. If not, then you got out earlier, right on top, fine. You must know how to re-entry back in. That means in this case, 76 and a half. So otherwise, you stop below the moving average. The moving average here is 64 and a half. So you sell at 64 or 63. That's it. Unlikely that tomorrow it can go to 63. If it does, close at 53 or lower, exit. That's the stop loss. Okay, so remember in the designing of any good trading system, okay, you must have a stop loss. And the stop loss, in our case, we use either the 10 bar stop, which is the total modified Donchian stop, or the 50 EMA.
Okay, so let's say for this current trade, if you were to enter this buy on dip trade, you will enter at a 0.765 with a stop loss at 0.663. Okay, this will be an entry price and your stop loss price.
All right. So, exit timing, profit taking. So we already set our rule for stop loss, which is below the last 10 bars, which is the modified Donchian or moving average. But what if it goes up and we are making money? So how do we exit with a profit?
I see. Which point to exit? Is it?
Yeah, what the technique to use to exit when you are having profit. This is setting of stop loss is exit with a loss, isn't it? Now we already covered that, step 3. Step 4 is exit with a profit. You just got to say one thing. We use a trailing stop.
A trailing stop.
That's it. That's one way. You, as prices go up, you trail.
Stop. Higher and higher.
Trail using what? Use again a 10 bar stop, which is a modified Donchian. As it goes up, you trail.
All right.
So modified Donchian can be used to exit to trail your profit or to cut a loss.
Okay.
That's it. So that will be the timing to take. But the other way to take your profit is to use a Fibonacci extension, and when you hit the extension, you exit. For example, let's take this Charimin example.
Let's draw a Fibonacci extension.
Yeah, let's do an extension. I want to get out of not only that, like all this indicator. Okay, they're clean. So let's go to drawing tools. All right, then we have Fibonacci. So let's say that over here, this is the low, this is the high. We pull back, and that's the low. Targeting, yeah. If we go 1 into 1, that's it. If we use a 1:1, if it hit 100%, let's say you bought here on the breakout here, or you bought here, okay, on a breakout. You either bought here on a breakout or you bought on a pullback. Your measurement 1:1 will pack it here. If you hit 57, you're out. So that is called exit timing based on hitting a Fibonacci. It can be 1, 1.6, 2, all of which in this example already exceeded. Right. So now, if we exceeded, now let's say you already got out here at here. So you thought, okay, let's wait for it to pull back towards here and then buy again, no? But definitely didn't go and pull back for you to buy. It instead continue to rally. Now, next, this is the 5th step. You must have a re-entry strategy. Re-entry. So you got out at 57 cents.
Okay.
So where is your re-entry? Now, here's the secret. Just hear me out. Beautiful, this strategy. You click on total again. 2010 again. Re-entry strategy is when you break a new high, which is
the buy on breakout.
Buy on breakout. You buy on breakout again now. Where's the breakout here?
What a beautiful breakout.
Nice or not? Complete 5-step strategy. There's one more step, which is monitoring your system. 6. This is it.
All right. So
I'm going to send to you the answer.
All right. So from here, we can understand that step 1 is to get in the trend. Step 2 is how to enter and how to exit. How to enter based on the buy on breakout or buy on dip.
Look at this volume.
Right. The third is how to set a stop loss. The 4th is how to take
a profit.
Number 5 is how to re-entry. And number 6, correct.
Correct. And I say monitoring.
Monitoring
your system. 6 steps to building a simple, profitable trading system. I got all the notes. Okay. Now the other thing left that I forgot to mention just now is the time frame. What time frame do you want to use? Because the time frame actually depends on whether you are a day trader, okay, a scalper, in out, or you are a swing trader. it is important to ask yourself the first thing first, even before you design a trading system, is what type of trader are you? All right, if you are a short-term trader, yeah, so you got to use short-term indicators. Now, if you're a forex trader, for example, normally they are mostly short-term.
Alright.
Then you got to use a lower time frame chart, like 1 minute, 5 minute, 15 minute, and at most 1 hour.
Alright.
But
Okay. Yes. Okay. Whenever, let's say, whenever like this, there was a question where the question asked, design a trading system for a short-term forex trader. Okay, a short-term can be means as an intraday trader. No worries. Okay, don't be afraid. You can use TAD as well, just on a 5-minute chart. All right. So don't be afraid. Just use a smaller time frame for a shorter term, but the same methodology, TAD. No worries.
yeah,
Alright.
and this is where I'm glad you clarify, because TAD is so synonymous with stocks that sometimes some students feel that, hey, too slow like this system. Well, that's because you're using a daily chart.
Yes.
And in stocks, please, daily chart is good enough. Actually, if you go down to the American stocks aside, you talk about Malaysian stocks, anything less than a day, you get whipped. Because our market is not fast enough, not quick enough.
Yes.
But American stocks, yes, you can go down to the hourly.
Hourly chart will be just right for American stock.
Here, because Nikkei and KS is in the American markets, right? And so now he has proven to me that the hourly chart on a lower time frame TAD works. Of course, they're still researching, and
For stock, it's very workable for that. Correct.
but for stocks, honestly, the TAD daily chart is the most ideal.
Yes. Correct.
Hence, that's why I started you all off on a daily on the stock market.
Alright.
Yeah, and we use a daily chart. Because as a beginner, actually, I discourage you from playing forex, because forex is like jumping into a swimming pool on the deep end. I mean, unless you know how to swim very well, you're gonna sink. Because it's so volatile. And it's got long hours, 23 hours,
It's a
And
very
during
fast
the inactive hours in the morning, they whack you, they whip you. So you only should play 8:30 to 12 o'clock at night, or even 1, 2. But you must get out.
Alright, like for now in our we are in this group, is a TFM group where Mr. Nicholas Tan is inside as well.
Oh yeah.
Okay, from 9:30 p.m. until 12 a.m. We will have this a live trade session in Telegram. So you can monitor there and see the chat ongoing. What are the counters, the pairs that Mr. Nicholas is watching. All right.
And you notice that when Mr. Nicholas is doing such short time frames, he doesn't use the daily chart. I mean, he uses 5, 15 minute and hourly charts. You see. So it is important when you to address this in your answer to this designing a trading system is to ask yourself, that can be at the end of the question, the answer, that depending on what time frame, what kind of trader you are, you use the kind of time frame. All right. So for forex traders and Bitcoin, for example, and you are a short-term Bitcoin trader, you must use the 5, 15 minute and a 1 hour time frame. If you are an overnight swing Bitcoin trader, by all means use the daily chart. And for those who are medium to long term, you can even use position holders, buy and hold for months. You can even use a week. In fact, a weekly chart is ideal for that, because like most fund managers, you think they trade every day? No, they don't use the daily chart. They use a weekly chart and a monthly, mainly the weekly for timing.
Alright.
So that's because they are long-term position.
They are more for investors.
Depending on the time frame that you're in.
Alright. So now from 6 point become the 7 point. The 7th point is to determine what type of trader you are, and also what time frame you will be using.
Okay. Then last but not least, the question asks you, point out any possible weakness in your system. Now, okay, this is the last point. So you merely just got to name 3 points. Don't have to go 10 points and try to impress. In an exam, you don't have that time. So can you all roughly tell me what are the three advantages of a trend following system? Basically, you are telling the advantages of a trend following system.
Right. So list down 3 advantages of a trend following system. Okay.
So what? Oh no, advantages and disadvantages. Here they ask you to address the weaknesses lah.
Yes, based on the question here.
Yeah, it's actually
Over here you can see this
point out possible weakness lah. Sorry.
Point out the possible weakness in your system.
So no need to talk strength, talk weakness.
Based on this question, you don't have to talk strength. But if the question asks, then we have to tell.
The weakness is the opposite of strength lah.
Okay. So Sis Shirley have said, let profit run and cut the losses short.
That is the weakness.
That
is the strength.
Strength, correct. Because I think there's some slight delay in our
So
audio.
the weakness is, in a sideways market, this system whipsaw is not profitable.
Right.
Because you said let the profits run and cut your losses short. That means in a trending market. So then in a sideways market, they are not profitable.
All right.
Let profit run is an advantage.
Okay, so what is the other 2 weaknesses of this trading system?
So now let me ask: is moving average a leading or the lagging? Right?
Is it a leading or a lagging indicator? Moving average.
So we all know, right? It's lagging. So in a lagging indicator, such as an MA, can you buy at the lowest and sell at the highest? You know, right? You buy off the lows and sell off the highs. That's a weakness, you know. So that's is that fair enough, KS?
Correct.
A weakness of the system. So that's the second one. So in a non-trending market, they tend to be whipsaw. So you like your profit run, cut your losses short. Well, that's the advantage lah, you know. But in a non-trending, it tends to whipsaw. Now there's one more here lah.
The
system does not work in an illiquid market.
So third, sideways a trend system cannot work properly in a sideways market, in an illiquid market. Okay.
But then in an illiquid market,
any method
also hard lah. All right.
Right. Okay. So now we know.
Okay lah.
3 weaknesses of the trending system.
That's it.
All right.
All right. So I think if you can do it the way I did it and share with you, you're going to get maybe 18 marks.
18 marks out of
20.
Wow.
20. Remember, there are 36 minutes, okay, for this question. Okay, because there are 180 minutes for, So that means 18 minutes for 10 marks. 180 minutes for 3 hours. So 18 minutes for 10 marks. So 36 minutes for 20 marks. So you try to time yourself also is good also. But writing, try to time your own writing because you're so used to typing that when it comes to handwriting, your hands get tired, your fingers get tired, you didn't realize, you know. So you may not be able to write as fast. And if you write fast, your writing becomes illegible. People cannot understand.
They cannot read properly.
So I'm afraid that's why it takes a lot of challenge to really go into the exam hall and take an exam. So think properly first. All right, I'm not trying to scare you. Okay, I would like you to take the exam. And,
take up the challenge.
Take up the challenge.
We'll be here to guide you.
We're here to guide you. You're not to worry. So this is it. I hope you learned something tonight. Okay, and
so far, do you guys understand how to create a trading system? And also, over today's class, we have learned actually how to apply the TAD and also the TAD fast turtle in a trading.
All right.
How to trade these two. All right.
So before I end up, just let you know, if you want to put the indicators underneath, you can, but it's not for exam purposes. You go to indicator, and then you add. Now let's say now we are putting, let's say we are putting the atom in Bollinger. You see how the Bollinger can help you. Indicator, add more.
So atom. You guys
atom.
also have the atom in your own system.
Okay, if you add atom, okay, here. What atom does is that atom is a medium term indicator. Now, a duck is most legged. The atom is medium, and then the turtle is the last one. Before it rally, it has to break out. So the atom is the most leading, not the turtle is the most leading indicator.
See.
All right. So now I put the atom here. Can you see here? They are all arrow by, arrow by, arrow by. Here the atom already called a cell. Trigger a cell now. Atom means Bollinger. So let me draw a Bollinger on it. Bollinger is normally drawn on the chart. So we put Bollinger underneath the chart is our own way of designing it so that we don't mix up the arrows of the Bollinger with the arrows of the turtle, that's all. Okay. Now let me just add. You can also do the same. So we add
more.
Bollinger. So we go and type Bollinger. And if we do it this way, then the Bollinger will appear on the chart. Okay, so two standard, the shaded area.
Over at your own
lovely
system, you can see there will be a Bollinger Band 22. Because Mr. Fred has saved his own default. Okay, so over here you can see there's under Bollinger Band there's an N and P. The N remains as 20. The P will change to 1.
Change to 1.
All right.
Now yours is like that. Yours is 2.
22.
See, when it's 22, you cannot. It's not timely. It's very lagged. Yeah, you can't time the breakout. What we are doing is to time the breakout now. Don't get me wrong. Bollinger Band 22, they are very good for exhaustion. Like here, see, they go out of the band and they go back into the band, exhaustion. And then when you see the stochastic is overbought, this is really good.
It'll be a good
it works. Not to say it doesn't work, but our turtle, fast turtle also will trigger around there. And you got Japanese candlesticks called dark cloud cover confirmation, and you will also be exited.
Yes.
Okay, so it's just that we are using 21 as here 21.
Bollinger Band.
Bollinger Band. Okay, that's the Bollinger Band.
So we change the 2 to 1.
You see, once you change to 1, you see how above the shaded area is your buy. And so that's why we use the Bollinger Band 1SD as a medium term, but the short term buy is still this. You still need to be activated, okay, by the turtle. Okay. So you have turtle, atom, and ducks. So this is now I have got to draw ducks. This is atom. So add ducks. Duck. So you see the duck is actually a 50 EMA. Just that we design it underneath the chart as a histogram. So why histogram? When it crosses price cross the moving average, the histogram crosses 0.
So you'll have buy signal over there.
Notice there's no sell signal here yet. See that? Price is still above the moving average, and so same here. The duck is above 0.
So now for Charimin, it's overall it's still a TAD buy.
With the 76 cents or higher, or 67, 76 or higher to confirm re-entry this stock. In fact, it's a good stock, huh?
All right.
To monitor. So with that, we thank you for listening. Any questions you'd like to ask us
on this?
Otherwise, we'll see you again.
Sis Shirley say a great session. Thanks.
Great, you like it? Right. And with help from KS, yeah?
So,
and Nikki over there.
Any other questions? Okay. Now we will end a session and we will see you this Saturday.
This Saturday?
And also tomorrow morning, Mr. Fred, we have a live show with Nina.
Please come and support us.
All right. If you like
8:30 morning.
All right. And
tomorrow.
You'll find out even more stocks to buy on it. Okay. All right. Okay. So we'll see you guys Saturday. Good night.
All right. Good night.